Hello and welcome to another episode of Our Own Devices. And as I keep repeating every time, I think I have the same intro every time, is that I'm going to tell you or I'm going to introduce you to something new. You're going to learn something new in the process. And this time we have with us, a company that is making quite a big name, and I mean it literally, for itself in the world of fintech by sort of, empowering, customers as well as merchants by sort of connecting the dots, making payments much more easier online. And that is Razorpay. I'm sure, I think almost everybody in India who's made some transaction online definitely knows about Razorpay. And as in a couple of recent visits abroad and all, I figured out that people outside also now starting to know about Razorpay. So we have with us Rahul Kothari, who is Chief Business Officer of Razorpay. Mr. Kothari, welcome to the show.
Thanks, Nandu. Hi, everyone.
I'll just ask you, from a context perspective, and since a lot of our listeners would be interested in knowing about it, Razorpay, is a relatively new company, right? And it's sort of scaled up very fast. Like, could you give us a sneak peek into this journey and how it's evolved?
Sure. So Razorpay started around 8 years back, and it was founded when our founders really saw that the process of merchants coming online, especially small merchants, was pretty cumbersome. It took close to a week or even more for small merchants to kind of finish their onboarding process, start accepting payments. And the overall thought was so many businesses, new businesses, will be looking to come online. And if we can make the entire process very seamless, it started with that thought process, and one of the single biggest USP that we had at when the company started was to take the merchants online in a matter of few minutes rather than the few days or weeks it was earlier. And it was built on the basis of several new technological innovations, whether it was, say, auto KYC, auto onboarding, or providing some of the tools for merchants to go online very easily. It was built on the basis of that. And over the time, the company has grown a lot in terms of diversifying its overall portfolio from payments perspective, and also getting into business of neobanking and in the business of lending. So yeah, today we process more than around say around $80 billion worth of GMV annually, and process close to about 10 million transactions a day.
You had this journey, and in this journey, in the past 2 years, you have maybe seen a tremendous spike with people moving online, and because of the pandemic, and almost everybody buying everything online, right? And it is not anymore a tier one, tier two kind of behavior. It's across the world. Across the world, people across all kinds of geographies and economic backgrounds are now moving to online purchase. So, was it really difficult to scale up, or did you build your backend in such a way that you could scale up, when this demand happened?
Yeah, so I think scaling up from purely scale and volume perspective was definitely one thing. But I think a more, I would say, innovative or more challenging journey was how do you evolve as the kind of customers which are coming online and doing transactions, and what the expectations, and how do you kind of keep innovating on that. Like for initially when way back when customers were doing transactions, if you remember, overall OTP coming on the phone and then kind of switching was screen to SMS, reading that SMS, putting it on the payment screen, and then doing a transaction. It was a fairly cumbersome journey. I think from there, the first innovation of having, say, auto OTP read, and how do you kind of have the OTP on the merchant page itself and not on the third party app, were some of the early innovations that we did, where the entire experience of making payments, how it becomes less cumbersome. And at the time, it really helped a lot of people who were not that, I would say, mobile savvy to do transactions seamlessly. Then also over a period of time, we did a lot of innovations at our backend in the overall payments value chain to make sure how the overall success rate of payments becomes significantly better. Like earlier, and I still remember around 6 to 7 years back, the typical success rate for the payments used to be around 60 to 70%, which means around 30 to 40% transactions used to fail. And if you think from a consumer perspective, especially when a lot of new consumers are coming online, and if their initial one or two transactions does not go through, in general they would not try doing online payments, soon enough, right? Typically they might again become the offline consumers. So I think over a period of time, increasing this overall success rate by a lot of vertical integration and technology integrations with different payments players, or different payment providers, whether banks, etc., we were able to make it seamless. Now, from this, Now next we have moved to to a place where we are trying we our products really provide the payment experience to small merchants to the level of what the largest of the e-commerce companies provide. Like one of the similar this kind of product is a magic checkout, where we provide one click checkout services, where say the overall address or the credentials of the end consumer is pulled from the repository of the merchant, where we determine whether COD is a good option or not, depending upon return to origin country data, etc. So I think overall journey in terms of how do we make the payments experience more and more seamless, and move from not only making a better consumer experience, but also for merchants, how do we make it a far higher conversion rates and therefore higher business, has been, I think, the real journey for us.
Also, it's interesting that you mentioned the very high failure rates we used to have earlier, and which sort of worked as a deterrent for a lot of users to come online, right? But there was also if you remember the conversations a few years back, people were very skeptical from a security standpoint. If I make an online transaction, I might lose money from my bank account, those kind of
Yes.
things. But uh, I think products like Razorpay have also helped take that conversation out completely, right? People don't really think that an online transaction is now less secure than having handing over cash to your to your kirana store in person. So how has that journey happened? Like how did you work on that bit? Because I think that has been one of the big success points from online transaction in a perspective.
Uh, yes, definitely, and you are right. I think in general, and people I think often bring this conversation, that in most of the developed countries we do not have two-factor authentication. Why regulators insist on second-factor authentication in India? I think from a regulation perspective, it makes a lot of sense to have second-factor authentication because a lot of new consumers are coming into the ecosystem. If their initial transactions result in fraud, they would again never coming back for the online transactions, and therefore I think from a regulatory perspective, also from business perspective, it makes a lot of sense to have strong risk checks during a transaction process. I think leveraging technology, what we have been able to do is to really reduce the overall fraud in the reduce the overall fraud, at the same time deliver a better consumer experience, having the checks and controls in place. And I'll give you probably three different examples. One is when we talked about earlier, as I said, when SMS used to come and person has to flip screens and then type the OTP, and more often than not, they would make a typing mistake and transaction will be unsuccessful. I think through auto OTP read and submit is one thing where we took this entire inconvenience out of the process while ensuring that two-factor authentication works seamlessly. The second example is what we are doing, say, in the Magic Checkout, the earlier product I spoke about, where we are taking the information which is already with the merchant to populate the address details, at the same time using a lot of information that we have in our background, which says that whether there could be even a fraud in terms of the delivery of the shipment itself. uh, it is probably more of, again, this is another kind of fraud which can be prevented through technology and having products like Make Checkout. The third example is like also the offering that we have for international payments. Now, for international payments, for a lot of those transactions, there are not second factor authentication, but we have built a lot of strong enough risk engines to make sure the risk within those is also limited. And because of this, a lot of small merchants are also able to provide services to international consumers because they know that the chances of fraud there is significantly lower. So again, it is, I think, always a balance between how do you manage risk, at the same time make sure the experience does not take a backseat. And therefore I think it's an interesting and a difficult problem to solve.
You also mentioned that the RBI has put in place a lot of things that makes this even more secure. But do you think at times the central banks regulations can also hamper easy transactions? Like we have a rule which sort of makes it very tough to do recurring payments in India. What's your take on that?
I think there's always a right balance to be struck. I would not see, does regulation sometimes make it tough for a good experience? I think yes. But do I think it is not required? No, I think it's required. It's more about how players like us are able to figure out ways to really make it seamless. And
Implement
also,
it, yeah.
yeah, and I think also I think regulation has been pretty progressive on it, right? Like for example, recently, uh, there's a launch of UPI Lite. Now there, what regulator is saying that okay, you cannot, you put say 2,000 rupees into a wallet, and then for every 200 rupee transaction, you do not need second factor authentication, which means for the small amount of transaction, risk is acceptable, and probably customer experience becomes far more important. And some of these earlier interventions and earlier specific approvals also regulator has given. So I think it makes it difficult but also important to really have the right balance.
It is interesting that you mentioned UPI in the process. So, so how important do you think UPI has been, especially in in the context of financial inclusion, increasing the pie size for Indian users?
So I think UPI has been probably one of the biggest success in terms of getting the inclusion and increasing size of the pie. I think two major things which drove it. One is definitely the simplicity of the payments using UPI. I don't think any other payment instrument right now is at that level, except probably few small kind of payment instruments. But at that scale, I don't think there's anything which is close to UPI in terms of overall experience. And second, I think also because of the push from the government in general, uh, to have a higher acceptance of UPI, also in terms of the charges that can be for UPI. I think overall both of this has driven the UPI penetration significantly. I remember, I think I think again 3 4 years back when UPI was launched, and we used to see around close to 10% or even lesser share of the transaction volumes for UPI. Now it has become almost close to 40 to 50% of the overall transaction volumes that happen on the merchant side. And I think now UPI has primarily replaced debit card and net banking, but going ahead with some plans to have credit backed on UPI, I think it will eat
Yeah.
into a bit of the credit card space as well.
Or is it going to increase the billing size on credit cards because you now have an easier way to sort of transact on credit cards?
Yeah, definitely. I think it would be more of overall increase in the share of the pie, or in the
Yeah.
size of the pie itself, not share of the pie.
Yeah. Is it also because we had a very interesting conversation with another person recently on the same topic, and I wanted to understand whether it's also going to take the UPI transaction, the value of the transaction itself, the ticket size of the transaction itself to a larger level because you are now pulling from credit and not from your bank account, where you might have limited funds.
I think so. I think in general, the average size of the credit transaction has been larger than the size of debit transaction.
Yeah.
Just if I take out the
Then,
investment space aside, I think it has been higher. With this, I think similar behavior is going to happen within the UPI as well.
so the other thing I wanted to learn from you is that, see, how important is it to offer choice from a customer side? Right? When a customer is buying something, he comes to your platform. So how important do you think is to offer all sorts of choices to the customer so that he can pick what he is most comfortable with?
So, no, I think as a consumer, as the number of payment options that you have or the number of choices you have is definitely a very big value add. But at the same time, I think it's also where the real impact happens is if we are able to determine for a particular consumer, depending upon is the earlier transaction history, which are the payment instruments which makes a lot of sense. And I think that's where having or at least presenting a smarter choice to the consumer makes a lot of sense. For example, a customer who is coming for the first time and doing a transactional merchant, I think pretty much most of the payment instruments are pretty agnostic. But for example, if I know Rahul has come on earlier on this merchant website or on our checkout, and earlier his two transactions on UPI were successful, whereas on say net banking he did not go through because of wrong password, then probably giving the UPI as a preferred option in next transaction makes a lot more sense. Also going forward, like for example, the consumer is on a checkout where he or she is buying say something which is worth more than 50,000 rupees, then probably having providing a preferred option of a EMI makes much more sense than providing an option of say a debit card or net banking. So some of those smart understanding of the consumer behavior would be, I think, a better solution for the consumers.
Is there a smartness that needs to be built in or is already built in when it comes to the platforms also? Because I've often seen that when you're trying to order food, for instance, on Swiggy or Zomato, it might tell you that there is UPI is experiencing a high failure rate right now. Maybe try something else, or it doesn't even let you use UPI. at a certain
Yeah.
point of time. How important is it for that intelligence to be built into the system of understanding which platform is performing well or which channel is performing well right now?
So I think it's very important, and where Razorpay is really contributing. You see, I think you picked a very good example. Whether it's Swiggy, whether it's Amazon, whether it's any of the large e-commerce companies, they are able to very seamlessly integrate their commerce experience with the payments experience and provide a very good end-to-end seamless checkout experience. Whether in terms of pulling data of the customer into the checkout so that they don't have to put in details again, or providing which is the kind of payment instruments which is preferred for the consumer. But for very small merchants, it's extremely difficult. For example, I start a website today, it's almost impossible for me to have experience which what some of these larger e-commerce companies providing. And I think that is one of the biggest challenges or the concerns that we keep, or the demand we can keep hearing from our smaller merchants. And that's where a lot of innovation that we are doing is for these smaller merchants, where they are able to provide the seamless commerce experience which can compete with some of the larger players. And I think one of the ways I like to say what Razorpay is doing is to really democratizing the use of technology for best seamless commerce experience for the smaller merchants as well. Why is it that the best experience has to be reserved only for the large companies? It should be because I think the real today a lot of small offline players really want to go online, but they do not really know how they can do it in the best possible way, most seamless way, whether they will be able to provide the right kind of or similar experience that a lot of large companies provide. And that's what we really enable.
Interestingly, I learned recently at one of the seminars that I was attending, and I think it was some European speaker who was telling us that the experience of payments is always compared with the best payment experience you have had. So it's not like looking at in India this is the average experience, but people usually compare it with the best, most seamless payment experience they've had, and the comparison is always with that. I think that is very valid from what you have said. Like an Amazon
Yeah.
to a small Kirana store, the experience has to be same. Otherwise, there is going to be some drop off.
No, I think you have put this really well, and we have seen that once the consumers get a taste of what is a very good payment experience is, there's actually no going back.
So, from the merchant side, how much of acceptability are you seeing for, so you could be a very small merchant, but how many of them actually want to go online and be able to transact online? Or do you think there is still a lot of resistance, maybe at the very small level where people are not sure how to do it? It could be a knowledge, it could be an awareness issue. So, is that still an issue in India? And do you think that is going to be solved by, actually making your products like almost like a plug and play?
We today have close to 8 million merchants on our platform, and which, like, given the number, most of these are very small merchants. And why we have been able to get such a large number is because, not because we kind of enable or we provide the best payment experience. Why we have been able to get such a large number is because we have been able to help these merchants to come online very seamlessly. For example, Rahul is a small merchant, and he is has a kind of a offline store, and I want to go online. The first thing I want to do is probably have a website, and creating a website kind of takes some effort, and a kind of developer or a consultant who comes and do it. But if they come to Razorpay, it's very easy to start putting very few things on our payment pages and start accepting payment. It's almost like no coding required. You just take a Razorpay payments page, you kind of put what you want to sell, and you can start accepting payments. Similarly, if I want to accept payments by sending some reminders, etc., we have payment links and payment pages. So some of these products which allow very small merchants who does not have any experience of technology or coding to come online very easily, and that's how we have been able to get this huge number of the merchants. But once these merchants starts coming online, and when they start having more online traction, and that is when our some of the later suite of products start coming in, where we can help them start accepting, say, the recurring payments, whether we help them start accepting or have them on magic checkout, where they have far more better seamless experience on payments, and also start working towards what we've also seen, most of the merchants which come to us and start accepting payments via us also start kind of engaging with us for other financial services as well. For example, at some point they want to do payouts to their vendors. They will come and also say, okay, whether we can do payouts through us, and then to then they see, okay, by having pay in and payouts together, maybe it makes sense to have the overall neo banking relationship with Razorpay as well to help them overall reconciliation issues. Now then they have spent time with, say, for a few months, and then they see, okay, I have a requirement of a small loan, and just on dashboard by clicking kind of, get instant loan, they can get some loan and help them tide over, say, a day or two of cash shortfall, especially if, for example, if they're getting some volume discount, and if they can pay their vendor 2 days in advance, they can do it. I think this throughout the journey, in fact, there are even examples as where companies scale, and they thought, okay, now they have 15 employees, now I have to do payroll for them, but doing the entire tax filing for it is a very very big issue, and then that's where our overall payroll solution kicks in. So I think it has been primarily because we've been able to identify the different requirements or challenges that merchant has right from start to the level when they scale up, and how do we provide the seamless solution for them is what working really well for us.
Now, before we wind up, one last question I want to ask you, Rahul, is what do you think is the one big challenge in this space that you would like to solve right now?
There I think, definitely multiple challenges, and I think most of each of them worth solving. But I think personally, I think one of the still a big gap is very different kind of a payment experience in the online space and the offline space. The payment experience is different. Also, like for example, I might have some reward points which I can use online. Like you go to same brand, the same store. When you go on their online shopping website, you might be able to use the rewards, but when you go in the store, you might not be able to use the rewards. Even from a so I think from that perspective, having a very seamless online offline experience, I think it's very very meaningful both for consumers and for businesses as well, where they can have a single view, 360 view of their customers, how they're spending, where they're spending, what they are buying, the rewards which I have put in, are they kind of using optimally in offline and online scenario. So I think that's something which is really worth solving. And I think what has also happened in general, because online, uh, any failure or any bad experience in an online transaction practically means the loss of sale for the merchant. Whereas in the offline scenario, a failure, typically the cashier would be there and he would be saying, okay, sir, fir se kar do. Therefore, I think in offline, the experience aspect is not as developed as it is in the online. If you're able to really take the entire experience benchmark to the offline and have a very strong omni-channel payments experience, I think that's something a very good problem to solve, and I think a lot of value add for everyone as well.
So you were listening to Rahul Kothari of Razorpay, and very insightful conversation again about the kind of things that are happening in the online transaction space, and how I guess all of us use it, but we don't understand the intricacies of running the business. Thanks a lot for being on the show, Mr. Kothari.
Thank you very much, Mr. Rajan. Thanks a lot.
So you were listening to Our Own Devices. We'll be back again next week with another guest. Till then, goodbye. We are everywhere you listen to your podcast.